Testing, testing. All right. All right, guys. Good afternoon. I'm sorry about that. I think it's the morning. Good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks for joining me a little later on the day today at 5:30. I was shooting hoops. I didn't want to rush out of there, so a little red in the face just from shooting around, playing some ball, trying to get at least some exercise after the day. So back at it, rock and roll. It is June 14th, 2022 on a Tuesday. Let's go over the market. The Dow fell today half a percent. Let's see, 151 points down. Was a lot lower before, and we got a nice little push at the end of the day. NASDAQ end of the day green, up 0.18%. S&P down 0.38% at 3735. The VIX down 3.91%. I have that on my screen here. Small caps down 0.48%. I did have some IWM calls for Wednesday. That didn't work out, so I had to cut those, unfortunately. I was expecting us to at least test that 3,800 level right here on ES. We didn't get it. We just got chopped. That was all. Killing premiums. We just took it out. Tomorrow's another day. We have FOMC. We have retail sales tomorrow. We'll live to fight another day. No point of just holding and hoping. I'd rather just move on with it and see what else we get. 10-year yields soared 3.483%. The dollar gained. That number is incorrect, that 3% number. According to Bloomberg, which I have the terminal in front of me, the dollar index gained right now 105.46. You know what? Let me go ahead and bring up a dollar index chart here. Intraday price chart. I'll run up the tab. And that was up 0.36% today, not 307. The price is right? 105.45, but that number is incorrect. Just giving you the heads up. Bonds were sold today, down 1.26% on TLT. Silver and gold both down with a very strong dollar. High yield credit was actually bid. Now that's interesting. HYG, again, this is the proxy for risk like Bitcoin. Again, a liquidity factor issue here. If HYG continued to slide, you would have more downside, of course, but HYG was actually bid slightly, even better than investment grade. So it could be some dip buying there on HYG, which would really, really help the case that we're getting closer to a bottom, possibly. Crude oil did fall 1.5%. I know there was a question on it. Austin is asking about the crude oil and the gains on tax on it. What's going on with that? In regards to politics, guys, politicians are going to say whatever they want. That's just the normal reality. That'll never pass in Congress. Never. Maybe the House, Democratic controlled Congress, but it'll never pass the Senate. So, you're just going to say things just to say things in terms of crude oil or taxes. Throw that away. That's not happening. The last 3 years, crude oil went through hell and back. And right now, the market is expecting crude oil to be profitable, to return capital to shareholders, regardless of the price. Keep in mind, the last 3 years were an absolute dismal time for XLE, which was the energy producers. I'll go ahead and expand this. All they're doing, in my opinion, is just making up for lost time, in my opinion. Look at this. They were for 63, now they're at 84. But look at the drawdown to 22. So, again, that's just in the last 3 years. So, I mean, they have to make up all this, and we're finally getting a breakout. Do I think it's sustainable long term? Not really. But that's where we are in terms of the market with oil. So that tax stuff is just not going to work. I think it's just more of just saying just to say something at the end of the day. Pretty much a waste of time and energy to even think about it. Let's take a look here at Bitcoin. All right, I got to bring up a Bitcoin chart here. Here we go. See if we have this in front of. Here we go. Always happens to me. Bear with me a second. The Bloomberg chart is very, very sensitive. So let's go to Bitcoin. Now down 20. Let's go to an intraday chart. Let's go to a daily chart. Right now, it is down about 2% as the session rolled over. Really doesn't close, but you could see 21,506. The level I'm still looking at. Everyone wants to know, right? In terms of Bitcoin. It's right here, guys. Let's go ahead and put an annotation. We'll put a line so I can show you. Right here. That's your level. That's the level I'm expecting for at least to come by, was right around 19.5, 20,000. That is your 2017 high. That's probably the question I get asked the most. Hey, when do you see some kind of support on Bitcoin? That's my level. About 19.5 to 20,000. Now, again, guys, support is not a piece of plywood. It's not a wooden board. It's like a mattress. You can sink into support. May not break, but you can sink in. So could we get to 18,000, 17,000? Sure. But once we start breaking below 14, maybe 16, that's where below 10 is definitely in play. So keep an eye on Bitcoin. Let's go and take a look at the 10-year. The 10-year compared to the 10-year yield with the dollar. You could see just rolling together. Now, let's go and add some data. We'll go and add the S&P and compare it all together. And you could see exactly the S&P versus the dollar index and the 10-year yields. You're seeing what? Divergence. Again, we've always had the divergence. We always had inverse correlation to yields and the dollar. Again, cheaper money, easier to invest, easier to spend. We know the drill. But now we're tightening. Now rates are going higher. S&P is going down, obviously. Now this is a 1 month chart. If we go ahead and expand it out to a year-to-date chart, now you can really start seeing the divergence taking to place. Look at the S&P as we kept going higher. Now we have that inverse. Well, we had the inverse correlation, but now we've crossed, and that's right there. That's what you're seeing in the market. We're seeing a lot of hawkishness. We're expecting a ton of rate hikes, possible 100 bips tomorrow. We don't know what exactly might be. I think we're probably going to get to 75. 100 may be very, very interesting in play. But I think we'll get 75 where actual Powell says we may have inter-monthly or inter-session meetings, and we may have an emergency hike. I don't know if they want to use the word emergency, but that's definitely something to keep in mind. Keep an eye on the dollar index. Again, I have that here. And this is Bitcoin, of course. Let me get back to TOS to make life easy. Let me move this over here. Okay, let's see. And some Q&A here. Good afternoon. Does MPC seem extended on the monthly chart? Let's go and expand that. I think it's Marathon Petroleum. And this is on the monthly chart. So I don't have a monthly chart. Let me go and add a time frame. We'll go to a 10-year period. And there you go. Is it extended? Well, that really depends. If we go ahead and max it out, what? We are at multi-decade highs. Let me see if I can go ahead and max this out. 20 years? Yeah, man. Pure blow off top on Marathon Oil. Could it be extended? I mean, it could stay extended. Amazon was extended. Google was extended. Apple was extended. Doesn't mean it can't come back down, but it doesn't mean it can't go back up. If you like oil companies for the future, at least for the dividend return, like on MPC, then yeah, keep it. If you want to take some profits here, that's fine too. But let's go and take a look at MPC. The yield's at 2.26%. Granted, that's based on the actual stock price. That could change if the stock price goes lower. MPC does not pay a great dividend. I think Chevron or Exxon are a little better. But again, you could own, or Valero, VRO, but Marathon is okay. I don't see a problem with owning it. It's a value stock. Nick is asking, new low for the year on NQ was easy to be bearish earlier. Now idea. Well, now we have to see exactly what the market is, what the Fed is going to tell us. So let's kind of take a look at some levels here. We'll go and bring up a 3 year daily, and you could see here that the 161.8 extension Fibonacci level to the downside, right? Or we could flip that. That's 10.713. That'll get you back to July 2020 levels. Really the biggest level in terms of max pain, in my opinion, is below 10, 97.69. That'll get you back to 2019 levels, 2019 highs pre-COVID. I would hate to say that we spent nearly $8 trillion, I guess, on stimulus and the stock market, buying back, whatever, just to get us back to where we were before. Nothing would surprise me, but that's pretty outlandish. I think around 10,713 is a good level to start looking at a possibility. The big wild card here, guys, is earnings. We don't know if their price to earnings is still in play. We just had earnings, so we could do forward multiples all day, but a lot of guidance can be cut due to Forex, due to dollar being increased, due to recession fears, you name it. The good news is that some supply chains are getting better. Rivian, I believe, had their Rivian CEO was talking about supply chains getting better. So again, do we have some kind of light at the end of the tunnel? Sure, this is what makes the market. But again, to go in and put real cash to work, I'm talking about a good sum of money. No, you're not there yet. Hi, Carlos. Can you give me some thought on how the market will react to 50 to 75? 50 to 75, I think 75, the market reacts positively. I think 50 basis points, the market gets pissed and we sell off. 100 basis points is a big wild card. That would be considered an emergency. I think the market would fall after that. But 75 seems to be where the Fed shows seriousness. They have live data and they're willing to be a little bit more flexible. So I think 75 is your best case scenario, probably a sell the news event. I think the market will fill some gaps on SPX. You could see it here. We'll start filling here around 38, 3,900 or so. If you want to throw in some RSIs to kind of take a look, let's go and see. Take a look at the RSI on S&P on the 1 hour, oversold. It could stay oversold. Take a look at the RSI on the daily, right knocking on the door and oversold. How about the weekly, knocking on the door and oversold? Again, guys, you're probably going to get a snapback rally this week. Again, you'll probably fill this gap to 3,900, then to 4,000. All you do is fill the gaps. It doesn't mean we can't roll over. It doesn't mean that the worst is over. It just means on a technical basis, this is what may drive the price action. But again, that's what I'm looking for. I'm looking for upside calls. We just need to get above 3,800. That's the key. Do you think the global economy is slowly crashing as we know it? We are building more in country and China has new Silk Road. No, I don't think the global economy is crashing. I think we have something called, in my opinion, a big reset. A grand reset of asset prices based on inflation. We have a war in Ukraine, China, COVID, the Fed tightening, all central banks tightening, dealing with inflation, ECB, the Swiss National Bank, Japan buying back bonds, Australia. I mean, it's a global thing. It's not just one nation or one economy. Are we interconnected? Of course. Does that mean that all countries are going to go to the recession? If the United States does, they lead the way, yes. But for the most part, no, I don't believe so. I don't think a global crash or something like that would happen. No. There's a lot of things that the central bankers could do to stimulate the economy. Would that affect inflation? Well, the faster inflation goes away, the faster that the Fed has at least some ammunition in their pocket. What's your expectation for quad witching on Friday after FOMC? That I have to see exactly with tomorrow in terms of retail sales and the FOMC. Again, tomorrow's going to tell us a lot. If they do 75 and the market cheers, we're going to start filling some gaps to the upside. Doesn't mean that the bottom is in. It just means technical basis. NASDAQ and S&P has some gaps to fill. That's all. Imbalances from sales. That's all you're getting. Now, again, SPX is the cash index. You're always going to have gaps. Granted, they always fill, always being relative speaking. But if we go and zoom out a 3-year, there is no other gaps to fill. Not to the downside at all. If we go ahead and bring up a max, there is no gaps to fill to the downside at all. All the gaps are to the upside. So remember that as we go along. This is no gaps, just gaps here. That's 2. And do we have any up top? No. I think we filled them all. These 2 are the ones we're watching with a low RSI. Take a look at the hourly on SPX. 26 reading. Way below 30, guys. Where can S&P get if things get bad in my opinion, or your opinion in my opinion? Let's go and bring up S&P futures because I already have it set. So ES is not on oversold. So we bring up the daily. I'll bring up the 3-year weekly. 36.64 is my first level that I'm looking at. I had 37.50 written down in my head for the possible level to start buying. The only thing that's holding me back is that it's coinciding with the Fed. So I'm not willing to go ahead and add some risk ahead of the Fed. So let's see that maybe 37.50 is it. That seems to be fair value at 17 times multiple. If you go to 36.64 with all things being constant, with all the earnings being constant, no revisions, no downside EPS revisions, nothing, 36.64 gets you to around 16. And that historically is cheap. The problem is that if you have a recession, you need to get cheaper. That's where you need to start getting to around 14, 13, 12 multiple. Where does that get you? Now you're talking to possibly 3,000 with a recession. I don't think we get there. I think 34.99 is a hard support. That's the 200-day moving average on the weekly chart in a 3-year basis. That has been not broken since 2020. I think that's pretty much the end of the line. We may even get to the point where we get a mass exodus, big capitulation tomorrow with FOMC. Let's say this guy, Powell, fumbles it away. And with that being said, you can get one big whoosh down, that last shakeout of buyers, last shakeout of holders, where you get a minus 1,000-point day. That might be that marker you need to start looking at some, possibly adding some risk. I wait a couple of days though. I've heard of the 3-day rule. A lot of people wait 3 days after a big event to start buying, which is pretty prudent. Thoughts on MACD cross over the RSI level, very low on SPY. I don't know which time frame you're looking at. Let's see, on earnings report, who decides the forecasted estimates? It's basically just all analysts that just focus on that company. They have a consensus. I mean, Jefferies or JPM or Wells Fargo or RBC or whoever. Yeah, they all have different forecasting, but what most companies do or analysts do is that they get a consensus. Like, oh, he says this, is that, and you have a range, and then they work together on that forecast. There's tons of them out there. You can find them online and find price target upgrades and downgrades. That's easy to find on FinViz. For example, you can go and type in Apple on FinViz. I'll go ahead and move it. Here you go. Again, guys, this is free. So again, I could see all the initiations. May 25th, reiterated, G.A.R Capital, a buy. Their price target went from 210 to 180, so they downgraded. And then you have an upgrade in January 28 from New Street, from sell to neutral, price target 165. These are the all most recent price target updates. In terms of EPS, let me see, the EPS next year is at 656 for Apple, for example. EPS this year is up 71%. This year, EPS next year is a growth of 6.83%. So again, pretty strong for Apple, especially in this environment, but those are just forecasts. It doesn't mean it can't happen. It can't mean that it won't happen. It's just a forecast. The saying goes, economists just make weathermen look good. That's all. And in terms of Apple, a couple of levels I'm looking at. 120 is a big level for me. 129, I believe, will be a soft support, but 120 to 97. If you can get to that $100 level, I'm in. No problem. I can only imagine what the PE ratio would be on an Apple trading at 100. You're talking about a 30% fall from these levels. I doubt it. I think we get to around 130, 129. That probably will be the low. A hard low would be 120, personally. In terms of BABA, I still own shares. I'm down still. BABA, nice bounce. Again, kind of a rotation into Chinese equities now. They've been beaten down so much. These things happen. A lot of people start throwing risk at the names that have been beaten down. Chinese names, give it about a year. A lot of people are going to start buying these high beta names. NEO, BABA, GME, SoFi, BA, or not BA, DraftKings, Riot. You're going to get some kind of nibbling and buying in order to take some risk on the table, especially when you get to oversold pessimistic conditions. BABA, as you can see, has been absolutely through the ringer. A lot of people want to buy BABA because it's cheap in terms of a PE ratio. Where does BABA trade at? BABA is trading, let me see, BABA stock. BABA stock now, PE ratio is around 31 in terms of a growing company, in terms of their revenue and all that stuff. Obviously, the last earnings report, I'm looking at the numbers here. Operating income is up, revenue is up, but their net income was down, and their diluted EPS was down. They missed on EPS, but they beat on revenue. So again, looking at this, do you want to dip your toe into a BABA here? Or maybe you want to go ahead and wait to see if we kind of round the corner of this this bear market rally. Again, guys, you don't have to get the bottom to the T. Be okay with giving up at least 5% on the lows. Oh, just got a news alert. Again, be okay with giving up 5 or 6% from the lows to make sure. That's all. Which time frame do you use for long-term investment when using RSI? I don't use RSI personally. I like using PE ratios and stuff like that. Again, kind of more fundamental than technical for the most part. But again, it's the daily chart. That's really what I go by. A weekly chart you can use for moving averages, but the daily is what I look for, George. So a lot to talk about. Tomorrow I'm going to be on again, 9 a.m. We'll go over the retail sales number. We'll see if there's any news in terms of the Fed. I posted something on Instagram that came from Bloomberg, a little bit of a guide to what to expect on the FOMC with some great charts. Take a look at that. I hope you guys enjoy it. At G.A.R Capital on Instagram. I'll see you guys tomorrow for the morning note. Have a great rest of your evening, and back to the charts. Cheers.